The next announcement relates to refinancing facilities for all India financial institutions like NABARD, SIDBI and the National Housing Bank. All India financial institutions such as NABARD, SIDBI and National Housing Bank play an important role in meeting the long-term funding requirements of agriculture and the rural sector, small industries, housing finance companies, MFIs and NBFCs. These all India financial institutions normally raise resources from the market through specified instruments which are allowed by the Reserve Bank of India, in addition to, of course, relying on their own resources. In view of the tightening of financial conditions in the wake of COVID-19 pandemic, these institutions are today facing difficulties in raising resources from the market. Accordingly, it has been decided to provide special refinance facilities for a total amount of rupees 50,000 crores to NABARD, SIDBI and NHB to enable them to meet sectoral credit needs. This will comprise of rupees 25,000 crore to NABARD for refinancing regional rural banks, that is RRBs and cooperative banks and microfinancial institutions. Rupees 15,000 crore will flow to SIDBI for on-lending and refinancing, and as you know, SIDBI will be lending this money to, by way of providing refinance to scheduled commercial banks as well as to other financial entities, NBFCs, MFIs, etc., who sanction loans to the MSME segment of the economy. And NHB will be allotted rupees 10,000 crore for supporting housing finance companies, HFCs. Now these amounts which I announced, that is totally 50,000 crore, of which 25,000 crore goes to NABARD, 15,000 crore goes to SIDBI and 10,000 crore goes to NHB. These amounts have been determined and decided in consultation with these institutions. Should there be additional requirement by these institutions, and again depending on and based on the actual utilization of resources provided, funds provided by the liquidity provided by the RBI, if there is a further requirement, the RBI will assess the situation, review it and take further measures to step up this level of liquidity support. Advances under this facility will be charged at RBI's policy repo rate at the time of availment. So these institutions get it today as per the repo rate, which is 4.4%. So therefore this will enable these institutions to provide the refinance at an affordable rate, at a reasonable rate, when they extend this money to various lending institutions. The next announcement, and this is very important, relates to the LAF, Liquidity Adjustment Facility, and this relates to fixed rate reverse repo rate. That is the reverse repo rate. As I have mentioned earlier, the surplus liquidity in the banking system has risen significantly in the wake of government spending and the various liquidity enhancing measures undertaken by the RBI. On April 15, the amount observed under reverse repo operations was 6.9 lakh crore. Earlier, what I had given about the system liquidity, that was net. That is the difference between the repo and the reverse repo. What I am now saying is one way of flow at the end of every day, how much flows from the system into the RBI through the reverse repo window. That has been in the order of, on April 15th, the RBI absorbed rupees 6.9 lakh crore through the reverse repo window. So that much of surplus was available with the system. Now, in order to encourage the banks to deploy these surplus funds in investments and loans in productive sectors of the economy, it has been decided to reduce the fixed rate reverse repo rate under the liquidity adjustment facility by 25 basis points from 4% to 3.75% with immediate effect. So I repeat, the reverse repo rate is being reduced by 25 basis points from 4% to 3.75%. The policy repo rate, however, remains unchanged at 4.4% because that is a matter which is decided by the MPC, and also the marginal standing facility rate and bank rate, they also remain unchanged at 4.65%. The next announcement relates to ways and means advances for states. On 1st April 2020, RBI had announced an increase in the ways and means advances